Workers are striking. Markets are falling. We are here to cover all of that and more today on Money Never Sleeps. Welcome back, everybody. Looks like Mr. House is a few seconds behind because I'm still hearing the intro play, but all good. Welcome back to Money Never Sleeps. Excited to have you with us today. I am being joined by my buddy, Mr. House, stepping in for Kevin, who is off on assignment somewhere. Appreciate you being here. Hit that like button as we get going today. Subscribe to our channel. Nothing we say is financial advice. House and I are not financial advisors. So do your own research before making any buys or sells. Randy, good to see you. Chris, good to see you. Payne, as always, good to see you as well. Excited to chop it up today, House. It's been a brutal day in the markets, especially for tech. We are seeing the sell-off broaden here. We are seeing ARM begin to take a hit after yesterday's huge IPO launch. The stock getting up to exactly $69. I mean, even in TradFi, they're into the meme numbers. So that's absolutely great. But what are you looking at today in the markets? I love having I miss Kevin, obviously, but it's good to have different people on, get different perspectives. What are you focusing on as we wrap up what appears to be another red week in the markets?
Yeah, I mean, this honestly sounds or will probably sound really weird, but I saw gas and ETH, or I guess GWeb, hit 40, which is the first time I've seen it above 20 since meme coin season back in May. So I thought that was pretty interesting. Honestly, just the chop in ETH and the swift rebound that we saw after it dumped back into the 1500s, that was pretty surprising to me. So I'm watching a lot of stable coin levels, Bitcoin dominance relative to stable coins. And I mean, just watching my stock portfolio go down bad fast. That's pretty much it. So I'm focused on crypto so I don't have to see red.
There you go. I'm not even looking at my stock portfolio these days. I'm not touching anything. I'm not selling anything. I'm not really buying yet. I have dry powder on the side waiting. Speaking of gas, oil is one of the few things that will have another winning week. We see Brent crude at 94 a barrel, WTI at 91. It is going to close out a 4-week winning streak here that has it, closing at its highest level since August. Sorry, I'm looking at the monthly. I'm not looking at even at the weekly here. How many weeks in a row is oil gaining? So, yeah, oil is going to be closing at its highest weekly number since November of last year. So, really strong showing from that standpoint. Continues to be a concern when it comes to inflation. And speaking of gas prices, we have to talk about the United Auto Workers strike that has kicked off in 3 plants in Michigan, Missouri, and then where's the third plant?
Toledo, Ohio.
There you go.
About an hour and a half, 2 hours north of me.
Look at that. My my home state of Missouri, where I grew up, Ohio for House, getting in on it. And, this could last a while. It's bad enough to where Biden felt the need to send someone else out there from his administration to help with negotiations. You gave me some data earlier, House, before we started that I want you to kind of, toss out there again for the people around what this could mean for GDP, not necessarily for Q3 GDP, but as we end we're a little over 2 weeks until the end of Q3, beginning of Q4. This could be one of the pieces that leads us to Q4 being the beginning of the recession that we still think is coming, although a lot of other people have given up on.
Yeah, so I was reading a Bloomberg article and then also a Reuters article discussing what's going on with these strikes. And so they were laying some context. The last time there was a strike of this magnitude was back in 2019, and it was just at one GM plant. That strike lasted about 40 days, I want to say, and it had just over a $3 billion negative impact on GM's profits. And the projection right now is, so right now we have 3 plants affected. If this strike lasts for 10 days, we're on day 3, it could have a negative $5.5 million impact on profits. And UAW has over 100,000, members of their union, and this is only 3 plants so far. So, there could be their demands aren't met and they feel like they're getting, poured into the deal, they could ramp up. So it could be really interesting to watch unfold.
Yeah, I'm looking at the prices right now for GM and Ford. Both are actually in the green today due to the fact that the expectation for the strike was actually worse than what we've seen so far. I'm no union expert here. It sounds like they're still pretty far apart on this thing. And just because they started with only these 3 plants doesn't mean they're not going to expand it out from there. So this is another one where the vibe is that the market is playing chicken right now with the union as well. Like it is the market and the companies versus the union. And if they decide to expand the strike to more plants, price of these stocks are going to go down. Like they just have to. And there's the ongoing part of the negotiations, not just around salary and everything, but job security as these companies begin to move more toward electric vehicles, reassuring them. And whether it's in writing or having to assume that the unions want there to be something in writing around the companies building battery plants here in the States so that workers at these plants, can transition into roles that build the power sources for electric vehicles as they move away from gasoline. So that is something to be, keep in mind as well. One thing I wonder with that is what are some other potential stock opportunities that go into that, right? Like we've all, the materials that are used for these batteries as they begin to expand there, like what sort of opportunities do we have from that standpoint? Something we can discuss in some shows next week as well. But that's definitely catching the market's eye. We have the triple witching, which is like the quarterly options expiry day of there's like $4 trillion of options that are set to expire today. I think triple witching is maybe the dumbest name for anything I've ever heard. But hey, no one ever accused financial market participants of being cool people. So you have that going on. That is definitely leading to some volatility, especially in tech. We see Nvidia getting its shit pushed in, down 3.6%. Another reason I'm not going to look at my portfolio today because I don't want to see how much money I've lost there. We have Tesla down about 1.25%. Microsoft down. Meta is getting beat up pretty good here. Tech is getting its ass kicked a bit today. Like I said, oil continues to be on the rise. This is all while the VIX is still only, sub 14, 13.97. It's up on the day significantly, but still a lot of room to the upside from a volatility standpoint. And I wouldn't be surprised if as we move closer to Q4, that comes to fruition. Now, on the crypto side of things, House, Kevin handles our crypto TA usually, but I want to get I know that you're an Arbitrum guy. I want to know what you're looking at in the crypto markets aside from, ETH and BTC. What is catching your eye there?
Honestly, I mean, I'm kind of in a similar position right now in crypto as you are with stocks. I'm pretty much dry powder. I was hitting a little bit of short action when we dropped back into the 1500s a couple days ago. But after we started pumping back up, I'm trying to figure out what's the next move down. I'm pretty much following. Me and Kevin are on the same page as far as we're seeing some corrective action. There's some interesting stuff going on with some stable coin mints and burns. So really, I'm just looking for some sort of sign that we're having, either a wave up or a wave down, and it's not just going to be like a 1 or 2 day thing, but it's going to be a lasting impact. So whether that comes in the form of one person dumping or some sort of black swan, I don't know. There's been a lot of stuff coming out of Binance US. You just had their head of legal and their chief risk officer resign, viewed it, and the CEO resigns. There was an article either from CoinDesk or Cointelegraph that I was reading this morning how the SEC was very disappointed with the discovery offered by Binance in the recent suit. So yeah, there's a lot of stuff that makes me concerned in the not necessarily concerned, but I just don't know where to put my money. So I'm not going to throw money at something and hope it sticks and risk the loss.
That is a good call, Mr. House. Okay. Looking at some of the weekly charts, and I can pull these up now. Let's look at a little crypto on the weekly. We can look at some TradFi as well. The crypto weekly doesn't close until Sunday, but we're seeing once again like this continued weakness here. Like things, even with that little pump we got this week, it's still pretty much flat on the week for ETH. So I think that there's still, I don't know, man. I don't think you can get too bullish here. What are you DCAing anything right now, House? Are you just mainly dry powder at this point? And what, I'm curious what your strategy is, as you think out the year, multiple years ahead. Like, what are you looking for that is going to encourage you to put some money back into the markets?
Yeah, I mean, I typically do a DCA into ETH and Bitcoin on a biweekly basis. And that's nothing that I'll touch and use for active trading. But I think really what I'm looking for before I deploy, a large amount of my funding that I've kept in stables is not necessarily finding the absolute bottom, but waiting for ETH to get at a attractive enough price to where I can start adding liquidity positions and getting into some of the pools, whether that's on Uniswap or going through Pendle or something like that. Because I've been able to save up enough, sell off enough dead JPEGs to where I think I could have a good liquidity position. And assuming that, next wave down is the last wave down before we get another big wave up and, head into some good long-term gains, I would like to lock in some sort of liquidity position so that way I can make fees as we encounter more volatility, but hopefully that volatility is on the upside and not headed down.
Yeah, absolutely. That's one thing I like to gauge people on is like, okay, I'm bearish right now. You're bearish right now. It shouldn't come as a surprise to anyone that Kevin's bearish right now. But, you have to be open to being wrong about certain things. And you have to have a contingency plan, because if you don't have a contingency plan and you just keep waiting and waiting for the bottom to fall out, and if it doesn't get to your targets and you just keep waiting and hoping and then it runs away from you, that's problematic. So I just kind of like to talk with people. That's why I do, I have my DCA going. I have a weekly buy. I actually just switched it up today. I have a weekly buy for Bitcoin, and I have a weekly buy for Chainlink as well. I just think that Link is one where, is it going to go down to $4? Maybe. Am I comfortable tossing $100 a week at it at $6? Yes, because I think, we've seen what that token has the potential to do. And I'm not afraid, if it sees a little bit of downside in the near term, or even a 40-50% downside in the near term, I'm not going to shit my pants and panic or anything. Like, it's still a very important token in my opinion. So we're going to wait on that one and just continue to stack it over time. Okay, cool. We got that. Let's look at on the tech side, because once again, tech is getting beat up. I want to pull up Tesla because that has seen a lot of volatility. There was some great news around the what they're building with their Dojo supercomputer, and that quickly got sold off like the next day. I believe I called on here that seemed like it was a little too much hopium, that was going to really move the needle in the months ahead, which very clearly that's a long-term thing. I think Tesla is a great stock long-term, but let's not get ahead of ourselves here. What is in your stock portfolio? What kind of things do you look at in the market? Like, are you pretty risk? Like, are you pretty heavy risk? Like, what is your, because you got a long time horizon. You're a young fella. Yeah. Your time horizon, mine is long too. I hope to be around for a while, but what, do you err on the riskier side?
No, I actually tend to be more of the risk averse, kind of following the high dividend portfolio model, just because I've got a lot of time. So if I can stack a lot of less volatile stocks and ETFs that are providing a high dividend, just let that compound over time. That's, I'd say, the majority of my portfolio, mixed in with some bonds and treasuries. But then I also have some exposure to Bitcoin mining stocks and Coinbase. as kind of like not necessarily a hedge against Bitcoin, but kind of following that pattern of if Bitcoin goes up, a lot of these Bitcoin mining stocks that are using renewable energy or are carbon neutral, whatever that proper term is, like TeraWolf and Hut 8, those went up pretty big compared to their price right now. So if we see Bitcoin hit even 30K, 40K, I'd be in the money on those. But for the most part, like I've got some Raytheon, some Lockheed Martin, Starbucks, CHRW. I've actually got a pretty big bag of Ford, which I'm hoping hoping to strike in soon. And then I've got like some payment financial stuff, and got some oil, wheat, corn, the usual suspects commodities.
You don't have any orange juice concentrate in your frozen orange juice in your commodities portfolio?
Now, see, here's the thing. I like my orange juice with pulp, and all the concentrate stuff's pulp free. So we gotta keep it 100.
So you like to chew your orange juice is how you approach it. This is a direction I did not think today's show was going to be going, but not a huge fan of that. Let's talk international for a little bit. I know that you keep up to date on, what's happening globally, which is awesome. Next week's a really big week for some of the big, monetary policy around the world. We have the Fed meeting on Wednesday. It is all but locked up that it is going to be a rate skip, and we've seen movement toward another skip in November, which doesn't make a lot of sense to me based on the data, but we'll see what the September numbers look like when October rolls around. Then we have, so that's Wednesday. On Thursday, I believe it is Bank of England, and then Friday is Bank of Japan. And I might have those dates flipped, but I know for sure Bank of England and Bank of Japan are having their next monetary policy meetings and announcing what they're doing with their interest rates. It seems pretty much locked in that Bank of England is doing 25 basis points. Much like us, they don't like to spook the markets too much if they don't have to. But the question now is Bank of Japan, because they are still holding rates at zero. And as they are at this point in time the largest holder of U.S. debt obligations, it's really interesting to me. Like, I think Japan is going to have a much bigger impact on what happens in the U.S. financial systems than most people are giving them credit for right now. So that is one thing I want to look at. I want to be paying attention to next week is what does Japan do on Friday, and how is that going to impact our markets? They'll have their meeting. It'll be the middle of the night here, and we could wake up to absolute chaos on Friday if they go out and they raise rates, and if they begin to, at some point, like other countries have, offload U.S. debt to kind of clear those off their books. What is that going to look like for us? How will the markets respond? What are bond prices going to do? How will that then impact stock? Like, this is part of what's fun for me here, is trying to get into these people's heads, and how will the market respond, and how can we act differently to use it as an opportunity. So that is just one thing I have focused on next week ahead of, Jay Powell and UK and Japan. But internationally, what is on your mind, with things in Ukraine, other parts of the world, and how you are using that information to inform any market decisions?
Well, so I actually have one question for you going back to Japan. So I know we talked a little bit about the carry trade a couple weeks ago. Not necessarily focused just on that, but what outcomes are you eyeing as like bear versus bull case? Is there any particular outcome that you think is extremely likely that you're trying to hedge against, or are you just playing like a wait and see type stance?
So the carry trade, that was Kevin's thing.
Okay.
So I can ask him that on Monday. That was more up his alley. What I'm looking for with Japan next week is, have we seen the peak? Are we seeing the peak of U.S. bond rates right now? Because I know there's some people, let me pull up on my end what those are looking like. So, we see 30-year. What are we doing? 30 years. Jesus Christ. I don't got that much time to make, 4% a year. That's crazy. But if we look at like the 2-year yield, 5% on the 2-year, potentially heading into a recession. And what I think is going to be, even with the election year, I think could be drawn out into something kind of terrible. Like I kind of like getting that 5%. I really like getting 5.4% on the 1 year, because I do believe that if we hit a recession next year, could it be a situation where you want to lock in that rate? Like you and I were talking before the show, and we'll look into this deeper next week. I'd like to have you come on with both Kev and I, but kind of looking at what has happened in previous election years, whether it was the incumbent winning or if it was a new president coming into office. And what we've seen is that a lot of, flat or down action actually leading into the when the election takes place in early November, and then after that we see the market begin to pick back up. So could a 1 year yield at this 5.4% be the best that you're going to get for quite a while? I think so. Granted, like you talk about to crypto, Pete, it's so funny talking about bonds with people who are into crypto, because they're like, wait, 5% for a year? What are you talking about? Like, but at the same time, if you're trying to be defensive and you want to lock in, some money right there, and you have a good chunk of change to put into it, I think it's a great way to position yourself, especially if you are under the belief that we're going to see a lot of volatility and you don't want to deal with trading that volatility. Just like, put that away, take the profit next year. And if you believe, like I do, that we're going to see things bottom out in the next 12 months, you're going to have that money waiting for you to, put where you want it. So I think that to me is what I'm most interested in next week. What happens to bond rates as a result of Bank of Japan's decision, and how then does that impact the other parts of the market?
No, yeah, I appreciate that, because I've been a little bit out of tune there. I've been focused on one country in Asia, just not Japan. So I've actually been focused a lot on North Korea. There have been a few things catching my eye, covering a wide variety of sectors. So I guess one is technically related to Japan. Japan's had multiple threat alerts go out to Okinawa recently, which is an island off the coast of Japan, because North Korea has launched ballistic missiles for test purposes. But then in addition to that, on the crypto side, the Lazarus Group, which is a prominent North Korean state-sponsored hacking group. I don't really know if that's like the hacking collective. I don't know. But they claimed responsibility for the stake hack, which came out for 41 million. And then they also found an exploit through the stake hack, but for CoinX, which was an additional 55 million. So, round of applause. No, I'm just kidding. But now Lazarus Group getting just under $100 million in crypto on the week. So that's pretty bad news. But then to round it up and tie it back into my favorite area of coverage, Russia and Ukraine. Kim Jong-un is actually in Russia right now, an invitation of Putin. They're visiting some fighter jet plants and seeing, quote, potential for cooperation between Russia and North Korea to manufacture some aircraft. So no, I mean nothing that really shook. I guess Lazarus Group was probably the most notable action taken.
Well,
Definitely
they need that money. I saw the story about him going to Russia and traveling there on the train, and they need that money if they're going to pay for gourmet meals and the expensive whiskey that he likes to drink on that bulletproof train ride of his. So it makes sense to me.
I mean that is a fair point. But yeah, I mean that's just nothing super like huge ramification on any market, but just some stuff that like we like to cover that long-term macro, keep an eye on it because it's going to bite at some point. And I think this is a culmination of events that you don't like to see, your two enemies being friends because you're their mutual enemy that they like or they hate worse than you. It's the old saying, the enemy of my enemy is my friend. So that's kind of what I'm seeing out of all this. And I'm shook, I'm not going to lie.
Yeah, it's not ideal, and it's definitely it's a little scary here. Chris, this is exactly what actually House and I were looking at before the show, was this period of here where incumbent versus new president coming into office. So we'll talk about that more as well. Anything else as we begin to wrap up today's show, House? We're not really going to do as much technical stuff without the Kev dog here. But what are, I guess, any final thoughts as we're seeing the sell-off continue. NASDAQ is now down almost 2% on the day. It is it's getting hit hard in these final 30 minutes of the trading day. But any final thoughts for the people as we wrap up another week in the markets?
Yeah, I mean, the one thing that you pointed out recently that I've been starting to think a little bit more about is stagflation, because the more that I look at and crunch the numbers of what's coming in from leading and lagging indicators, it really does seem like we're in that period. And tying it back to oil and gas, one of the biggest examples cited of previous periods of stagflation was in the late 70s during the OPEC embargo. So I think it's interesting because, what was it? OPEC said, is it end of September? Is it October that they're going to be, or maybe it's even sometime late Q4 that they're going to be cutting back on the supply released. So if we see a lessened supply, oil continues to get some sort of bounce in price because of supply shock, it could not necessarily have an embargo, but it's just curious to see. That was the big sticking point that I was finding looking at past examples, and we could be running into some interesting times with oil.
Yeah, so we did hear a few weeks ago that not all of OPEC plus, but I believe Saudi Arabia and Russia for sure stated that they are keeping their supply cuts in place through the end of the year. Initially, the expectation was they would keep them in place through October, through this month, but then they extended it for all of Q4 as well.
Okay.
And that is definitely a part of why we are seeing these, the increase in oil and where it is right now. You tie into that when we look on the TradFi side, a lot of airline companies are getting absolutely shellacked because they're having to pay more for oil. It's cutting into profit margins. Are they going to, put that cost on the consumer at a time when consumers don't have as much money? Are people going to be traveling less? I would venture toward yes. How does that impact the holiday travel season? Remains to be seen. But yeah, oil and energy is the big thing. And stagflation, it's looking really bad over there in Europe. Like it's a shit show over in the Eurozone. And I don't think that it's crazy to view that as a potential situation that happens here in the US as well, with inflation being really sticky due to energy prices, with unemployment going up, and with people running out of money and savings dwindling and credit card balances being higher and cost of just basic living being through the fucking roof. Like, we've talked about what you're looking for stagflation. It's increased inflation, increased unemployment, and a decrease in demand. And two of those three things we are already seeing in place. Now, granted, unemployment is still only at 3.7%. It hasn't cracked 4 yet. Once it passes 4 and gets closer to 5, that becomes a bigger fear. But retail sales, we saw it took an unexpected big bump up yesterday in that data point. So we need to keep an eye on that, because if we see that demand beginning to go down and inflation remains sticky and unemployment passes 4 and moves into the mid 4s or even close to 5, that is something that we have to be very wary of. So that is where I think we need to keep our eyes. But I'm going to leave it at that for today.
Yeah, absolutely. Now, great show. Thanks for having me on. Much appreciated.
Always.
It was an interesting dynamic. First replacing you, now Kevin. We'll have to compare who I do a better job of filling their role at.
You do a great job of both, House. I love it. We'll have to get all three of us on here sometime when we have like some big news days in the works. But that'll wrap it up for today, everybody. Appreciate you all for being here. Chris, Payne, Randy, Kevin, if you're out there somewhere, hope you have a good weekend. We'll be back on Monday to look to the week ahead, recap any crypto market news that takes place as through the rest of this weekend. But appreciate everybody. Once again, hit that button down below. Give us a like, a subscribe, comment, share us out on social media, all of that great stuff. Hope you have an awesome weekend, everyone. Stay safe out there, and we'll see you next time.